TNRD acknowledges that we connect with many First Nation communities across our vast regional district. And today we are located on the Tecumseh-Secwepemc territory, situated within the unceded ancestral lands of the Secwepemc Nation. The TNRD appreciates the partnership that we have with Tecumseh-Secwepemc and respects the territory and land on which we gather today. Any additions or deletions from the agenda? Okay. Minutes, we have minutes. Somebody want to move the minutes? Thank you, Director Grenier, seconded by Director Thorpe. Any questions? All those in favor? Thank you. I should note Director Laird is going to be a little late. And in theory, Director Morris was going to be auditing the meeting. She comes to them usually. All right, moving along to 5.1, financial statements. My favorite part of the meeting. Over to the Finance Department now.
Thank you, Chair Bass. So I'm pretty happy that we've been able to bring you the second quarter financial statements for your review. I'm not going to read through, obviously, the results. It has been a bit of a delay getting the results to you from when we finished to now. So the second quarter ended June. So the results might seem like they're a little bit behind. But I think that it's important that even though it's a little bit delayed, that they're still making it to you. And I'm happy to announce that I think when I first started and Aaron first came on, we really focused on the day-to-day and making sure the operations were running smoothly, and then doing a really tight month-end close process. And this September was the first month-end close we did within a week and a half since I've started. So it seems like a long process, but a lot of the processes and systems had to change and shift for us to kind of make that happen. So what that means is the quarterly results you'll be getting a little bit quicker after the quarter end than how long this one's been delayed, plus summer holidays and people being gone, and how frequent the Finance Committee meets. And I'd like to bring it to the Finance Committee before it's released to the whole board. So that's the only thing I would point out there, is I realize that it's a little bit after the fact, but we're bringing them consistently and the timeline's tightening up. Also been trying out different kind of formats of how to bring you the results, and trying to upfront put summary information. And then if you want to get into the detailed financial information, you have that option. I know I've had some requests saying that they want it shorter and they want the presentation shorter. The problem there from my perspective is I have a responsibility to make sure that we're providing all the information. And in order to do that on 124 services, it becomes a little challenging trying to summarize it in different ways. So what I try and do is do the overall summary with categories. I call them categories. So it's your overall TNRD wages, your overall TNRD supplies, your overall TNRD taxes. So it doesn't break it down by department or by service. And where that can cause challenges is typically you come in as an EA for your area and you want to see the results for your area. And that's difficult in the financial statement presentation, because where you see the results for your area on things are the services that are within your, I call it the service area menu. So whatever your area has, you have a menu of services that you've selected into. Some are regional, some are local area services, some are specified. So if you want to dive into information that is more to your area, you're probably going to look more to like a tax implication schedule or document. One of the other things I've tried to do is upfront of the financial statements is really just provide like a general overview. So if you wanted to skip the preamble and you just wanted to see a general overview, and if you were like, okay, I looked at the categories and the grants, we're really under what we budgeted on grants. What I've tried to do is if you went there, the notable variances, you should see an explanation of maybe grants are delayed, maybe we didn't achieve the grants that we were trying to do. So I've tried to pick out, and I think it was on Director Stamer's kind of recommendation, is to try and hone into some of the notes that would be more relevant that you would like to see. So I've tried to provide a bit of that in the beginning. That's on page 18. What I'm going to do is we've created a system where we can take the information from our financial system, pop it into Excel, and at any given point in time, my staff can go in and click, they can see their budget, they can jump into the variances very easily. And I also have that at my fingertips here so that if any questions came up, I could pop it up, we could drill into the information, and you could see the lowest level information that we're working with to give you confidence that whatever we're working on the day-to-day is pretty much available for you to see if that's what you wanted to. What I'm finding is if I'm giving the confidence of that, lots of times people, they might ask once or twice and they don't need to see it anymore because they know it's there. And as long as we can give an explanation. What I say right now is I'm not going to get into the variance explanations much here today, because when I present the third quarter, we'll probably dive into that a little bit more. That's more relevant information to the period of time. What I would say in the work that we're doing with the budget variance and being able to analyze the financials more quickly and more regularly, things are happening that you might start to notice. So you're going to see a report coming forward from Alex from Development Services, and he's talking to you about permit revenue and our anticipated permit revenue not being what we thought it might be with inflation and the economy. You're going to see a report coming forward from Solid Waste talking about recycling revenue. You're going to see reports in different areas, because as we're doing the budget variance report and as we start to foresee things that are coming, we're just doing a better job of bringing that information to the board so that you're aware of it, so that you know year-end results, why things might have occurred, why there might have been a deficit, or what we're trying to do to proactively address those issues. I'm really proud of that, because that is something when I first started, within the first year and a half, we didn't even have time to talk about. Different departments were doing that independently. We're just talking about it more as a group, and we're able to bring that to you guys to inform you, so you're not surprised when those things come up at year end. And then it also impacts next year's budget deliberations, because we're like, oh, assessing the permit revenues that are happening and based on the economy, we're overstating the amount of revenue. We have to make some adjustments, and then we're going to present that information to you during budget deliberation. And you might see lower revenues. You might see that we're going to try and have to tap into more of the reserves that were there in solid waste and development services to help stabilize the tax rate increases that are coming because of the lower revenues. So with that, I'm going to open it for questions. Once I've answered the questions, I do have a little bit of wrap-up information on that, if there are any. And then we'll move forward to the next topic. So are there any questions that you guys had with the budget variance information that was presented?
Director Grenier.
Thank you, Chair. Thank you for the work. It was very useful and helpful for me to see the progress on this. And as you said, Ward previously talked about keeping it simple at the front end and then dive down into details. So I have some questions and then I have some observations, and it's all from the continuing to improve. It's not criticism, so please don't take anything as a criticism. It's just, are there other ways that we could get more information? My first question is, we have a big variance, and you attribute it, you say, you know, we've got 6% versus 94%, 6% spent versus sort of 94% to the budget. And I'm thinking to myself, okay, that's a function of both the quarterly statements and the fact that a lot of our income comes in either the third or the fourth quarter. So I'm just wondering, if something was out of sorts in a department, any particular department, it could be out by 100%, but the variance, if it's 6 to 94, that variance would say maybe 9 or 12, which would make it 50 to 100% out of sorts, but it really wouldn't stand out against the 90. So I'm wondering if it makes more sense to do a quarterly statement that shows an allocation of a quarterly share of the income that you're expecting to get in the fall, or operate on a cash flow basis and just simply you just would not have any income. You're comparing it against an annual budget. You're comparing a quarterly thing against an annual budget. Would it make more sense to have another column that says, here's the attribution of a quarter of the income that matches up from the budget, so that we could see you've spent this amount of money in the first quarter and a quarter of the budget? So what do you think about that as an idea?
I think the way the statements are currently set up, it wouldn't be a hard adjustment to try out and see how that went over. I think for the most part, as far as income in local government, my experience has been not many people focus on the income presentation during quarterly, because a majority of our tax income doesn't come in until August. So we don't recognize quarterly amounts of income just to reflect it on the statements, because as a business is really using that information to drive how they make business decisions, we're guaranteed tax income. The only area where that would fluctuate is in user fees. So we pay attention to that as operations and budget managers, because we know that's what we have to watch for. And that's why you're seeing some of these quarterly reports coming out to you saying, oh, there's a couple areas. From my experience, I haven't even seen that in the history of being here, that there has been problems, or if there was problems, they weren't being presented to you. So we're trying to do that on our side. And I guess that was my long answer. The short answer is we could certainly try it out and see how that visually looks to people without too much work.
And thank you for that. And then I'm thinking particularly as compared to say an oil and gas company or a golf course, where you have a seasonality that is very apparent. And so in an oil and gas situation, you can only drill at certain times of the year. So you have big capital expenditures in certain quarters and less in other expenditures. It helps with that quarterly breakdown of your annual budget to compare where you're at. The other thing that you say here, and I accept it, but I'm just thinking as a director, how do I confirm it? You say low spending across the board when it's really a function of timing, and it's repeating, I think, more or less what I'm saying. You've said it's that we're low spending across the board, but there's nothing that I can jump in as a director without going right down to the details to confirm that. Whereas if that extra column was there, I could say, oh yeah, you're tracking the budget. So that helps support the statement when you say low spending across the board. Indeed, you can see it right there. So that was I thought that was something that would be useful. Thank you.
Okay, you're good. Nobody there. Okay, you look like you want to say something. Sorry. Anyone else have any questions or to raise with CFO Fox? Nobody on Zoom? Okay, we're moving along.
Thank you, Chair Bass. So I wanted to point out, because I think this is going to come up during budget deliberations, is the use of reserve funds to offset operational costs. So when I first came in and I said, there are some areas through COVID where they made some intentional decisions to pull from operating reserves to offset operating costs to reduce tax rates, which typically I recommend against. That's not sustainable. You can't sustain operations from that. Where we're being challenged on this, and I think during the budget deliberation with the rest of the board, where this is going to be really important, is that there might come a suggestion that when we present a certain tax rate increase, that we use reserve funds to bring down the tax rate increase. There are a couple areas where we've been doing this, and we presented this last year. So you'd see that in the budget variance report. In development services, and in solid waste. And those are the two areas that had large reserve balances. So you have actually access, I've provided reserve balances, surplus balances. You can access that through any of the financial information that I've provided to you. What's important to note that when we bring that forward, if we bring that forward and we are utilizing reserves to offset operating costs, it's very important that the board make that decision and understand how much we're actually utilizing. Because when we do that for you, it kind of takes away the ability for the board to make that difference. So what will most likely happen to bring you a reasonable tax rate increase, we're going to keep consistent with tapping into the development services building standards reserve and the solid waste reserve, because the tax rates are the contract costs increase so substantially that it was very hard to increase taxation reasonably for people to actually pay that. So what we did last year is over the 5-year period, we have operating reserves coming in as revenue, which decreases the amount of taxation you need to pay for your service. Okay. And what I've tried to do is taper that down. So by the 5 years, by the time the 5 years is done, that you're self-sustaining with your fees. Right now, there is in 2025, just over $1 million of reserves being used in those services to bring down taxation. In 26, another $1 million. So when we go into the room to do that budget deliberation, it's important for you guys, the board, to understand that that plan is being presented to you. You're going to see where our reserves are in the budget variance that's presented to you. So you can go and see the balances that are sitting there, and to be aware that that's a mechanism in building standards, because they don't really have capital. So when you have reserves like in solid waste and you have millions of dollars of capital that you need to replace, you got to be careful how much of the reserves you're utilizing, because then you're sacrificing future dollars to pay for your capital infrastructure. In development services, in building standards, there's not a whole lot of capital. They have vehicles. So having that big reserve there brought up a lot of questions about utilizing that reserve. Well, I can tell you we're using that reserve. You're already tapping into that reserve. I think it's almost $3 million. And over the 5 years, over $2 million of that is being used to artificially subsidize operating costs. That's worrisome to me. It's very important that when you look at these variances and when we get into budget deliberations with the board, that you realize that over a 5-year plan, we're going to be left with only $600,000 left in that reserve. And the important part of having reserve for building standards was for times when the economy took a dip, because it's very hard to predict. And especially coming out of COVID, it was hard to know what was going to happen. We kind of assumed that we might see high interest rates, we might see high inflation, but we couldn't have assumed how much the cost of goods and services went up, and that we had this huge boom and then it dropped to nothing. And development was, really handcuffed in their ability to bring in revenues because there was no activity happening. So please, as we go into those deliberations, it'll be helpful at that table that some of you understand already that those operating reserves, if we take that away and we're going to present that to you, if we don't have those operating reserves in there, what kind of tax increase you'd be looking at. So it's important to remember that piece. Solid waste and recycling. It was a high reserve. Everybody's looking that it's a $10 million reserve sitting there. Why? Because of the way that it was set up before, capital and operating were presented to you together. And we were taxing and paying for capital right out of taxation. The minute we move capital aside, if we don't put reserves into or if we don't make an intentional transfer from the operating budget into reserves, we don't have money for capital. So we're also looking at different ways right now to make sure that if there's capital in our 10-year capital plan and it's tapping into reserves, are there areas of grant funding, community works funds, community building fund, any kind of grant money that we can utilize to pay for this infrastructure to try and save the overall reserve balance, because solid waste has a large amount of capital within it. And if we utilize all that reserve to make sure that tax rates are low, then we're gonna create another problem. We're gonna create a problem where now we have a whole bunch of capital, and if we're spending $2 to $3 million on capital a year, how quickly that reserve depletes. So I just wanted to make you guys aware of, and take this opportunity to kind of educate around that a little bit going into our budget workshop that's coming up and what I'll be talking about with the board.
Director Grenier.
Thank you, Chair. Thank you for the explanation. One of the things that I was dealing with in reviewing this was trying to break out those anomalies, I'll call them. They're not regular income, or they're not regular, I guess, expense. So I'm trying to get to the net number. What is this department? Is it running at a deficit, or is it running at a surplus? And then there's the addition of the surplus, either in the revenue level or transfer on the expense side. And I'm suggesting that if you presented it, here's the revenue, here's the expenses, and then a subtotal line at the bottom after you see what's happening in the department, that is your use of the surplus or the reserve, I suppose. That would help us understand immediately when I look at the statement, oh, this department is running at a deficit or running at a reserve. Instead, it's muddled up because you've already done, as you say, you've taken some of those reserves, and that really isn't telling the full story. So I'm suggesting that those application of reserves be on a subtotal line so that we get the net effect for each department. Yeah. That's the first thing, and then I have a supplemental to that.
All right, so I just want to make very clear that reserve is an intentional contribution into an account that we hold the money. Surplus is not. Surplus is not considered a reserve. Surplus isn't intentionally acted upon. So what would happen, what Director Grenier is talking about, is at the end of the year, typically 85%, if not more, 95% of all the services would have a surplus in them, whether it's $1 or whether it's $800,000. Since I've started, we've reduced the surplus that you were seeing from 8 million to just over 3 million, $4 million. So with the work we've done already, we've cut your surplus in half. What that meant is we either reduced expenses or taxes increased because he couldn't reduce expenses and surpluses being carried forward. So I just want to make sure that you understand the difference there. So when the surplus or deficit is shown at the end of 2024, what will immediately happen, what's different than a municipality, is we have to take that and we have to bring it into revenue the next year. So if we have a surplus in 24 of $100,000, you're going to see revenue coming in from your surplus bucket in the next year of $100,000. And what that's going to do, we either make a decision that that's going to reduce your tax rate, or it's what we're trying to do now is use those surplus dollars to transfer them to reserve funds. Because as soon as you have a tax rate fluctuation, and if I reduce the taxes by $100,000, your constituents aren't going to care. They're going to think, excellent, you gave, like, I've got a lower tax rate here. And the next year when you can't come back and put those taxes back to the normal rate, all they're going to see is that you've increased taxes 25%. So, you know, you're playing a bit of, I don't want to say game. It's not a game. It's what is going to be the most acceptable thing and the most reasonable use of those funds. Director Grenier, that there's concerns that those surplus dollars are just being used to pump up expenses and use it as excess. Sometimes people are concerned about that. What we're trying to do is give you assurance that those surpluses are being used for certain reasons. So what we've done, and you'll see in the surplus policy, we've said, okay, based on a 10% reasonable operating surplus, if it's outside of that 10%, you're going to see that, and we're going to explain to you what we're doing with those dollars. If it's within that 10%, it's being carried forward and we're managing within, but you're still going to see that. A good indication is if you went to a service and you wanted to see how that surplus was being used. So what Director Grenier is asking for is something more that instead of us automatically absorbing that surplus, you're seeing the revenue minus expense with a difference rather than a zero-based budget. And then you get to make the decision of that surplus. I'm still giving you that ability. It's a little hard to change the way the statements are set up because it's a very manual process. So I'm going to take that into consideration, but I'm going to say right now that one's a little bit more challenging. What I would challenge you to do is if you're concerned about the surplus, we're going to present you a report that specifically shows the surplus for every service or deficit. And you're going to have the ability to comment on that. And if you want to dive into a certain area, you'll be able to see that surplus. Where you can see it, specifically, there's a line in 2025 that says surplus revenue. That's the exact amount of what you're looking for. So if you're looking for revenue minus expense for 2024, that balance is your surplus in 2025. Does that make sense? It flows through. So if you had a bank account, you had a business and you made 100,000, you spent 50 and you have a surplus of 50,000, that $50,000 amount for 2024's surplus is going to show up in 2025 revenue. For every service, every surplus shows up there. So you will be able to see it. We are going to present to you a report that shows every surplus. You are going to get your say on the surplus. Typically, what we're trying to do is keep the tax rate as stable as possible. Because you can imagine, we can't budget for a surplus, yet we know every year we have a surplus pretty much. So in 2026, as soon as that $100,000 surplus isn't there anymore, your taxes jump right up. So what we try to do for each service is balance that tax rate out. So if we have a surplus and that can go to a reserve to fund capital and it's an appropriate amount, if it's not, if we don't need $50,000 or $100,000 in reserve, we only need 25, then sure, you know, make a reasonable decision to give $25,000 back. But you have to be aware that it does come with consequences in some areas where people are very upset when you've done that. And all of a sudden they see the tax rate jumping back up because they don't actually understand what's occurring in the background. So we do, for the most part, try to keep the tax rate stable and manage the surplus without adding to the expense. So moving it to the reserve where that makes sense. That was trying to give context about some of the things we're thinking about in the background when we're looking at that. I will take into consideration if that's something I can change, but that's changing 126 financial statements, which gets a little bit complicated because it's generated out of a system.
Thank you for that explanation, fulsome explanation. And maybe I didn't make my point clear enough. I'm not suggesting that what you're doing is not valuable or useful. I'm talking about if I look particularly at your quarterly statement, and I'm looking at, I'll pick an item. It says small water well, it's alternative waste collection P total. And there are 3 line items under revenue: surplus previous year, transfer from operating reserve, transfer from post-closure reserves. Those are allocations of funds. They are not the actual operational costs, the tipping fees, the sign up and all the rest of it. Those are just simply transfers of funds, and they total about $1 million just in those items. So it's distracting from the actual cost before you do that by $1 million. And if it was simply if all transfers or surplus activities were on a subtotal line, so it's the same information, it's just on a subtotal, then we could see what you were dealing before, what you did under the surplus, and here's the result. And that's a much more transparent than me having to work out what I just said, which is it's roughly $1 million, 911,000, 800,000, 160,000. I had to total all those up and then subtract it from the line item. If it was there as here's what the department costs are, here's our use of surpluses and transfers and what have you, here's the net result. It would make for a more transparent presentation in the quarterly statement. That way we could say, oh, gee, this department is on track or not. And by you already adjusting it, then I can't see that as a director. It just makes it more difficult.
Okay.
Any other questions? That was for information only. We'll move on to the next, which is surplus and reserve management policies review. This you again, CFO Fox? Okay.
It sure is. I just gotta grab my paperwork. Just bear with me for a moment. I'm just going to, if you can bear with me just for a sec, I'm gonna open it on my computer here. I thought I had all the papers printed out, but it must have maybe ran out of paper. I was printing it. In the meantime, Justin, did you have the agenda that you could pop it up? See it on here. Oh, there we go. Okay. All right. So when I brought this to the finance committee, we've brought it twice to the finance committee. And first I had an integrated surplus and reserve policy based on recommendations from the board. I've split those into two. So you have a surplus policy and a reserve policy. So you can see those separated out. We had, and I got some feedback from the board members, but we also as a staff felt like we had a really good meeting with the finance committee, going through the different components of each of the policies and what we'd like to see. What I tried to do from that is take notes and incorporate into the policies what I thought I heard. For an example, opportunity reserve. There was a couple of board members that felt like there should be a mechanism to have the board have the ability to set aside funds if they want for potential opportunities. So what I've done is I've worked that within the policy. We haven't set any money aside for opportunity reserve, but I didn't eliminate the mechanism for the board to utilize the policy to actually allocate funds for that. So the main components of the reserve policy are the operating reserves, the capital reserves, risk management. So if you think of in a municipality, they do snow clearing, and some years there's lots of snow and in other years there's not, and some years they have excess money. It makes sense in those cases to possibly take the excess money and put it in the reserve. So for a year that you might have an overage for more snowfall, that you would have that ability to grab that. The other items that are important to staff is, say in a fire department and we have a pump failure, and that can cost quite a bit of money and that's not budgeted for. So what we want is to have the ability for that pump failure to be addressed through reserves, and the board have a mechanism to make a decision within a budget period to make a budget amendment to access reserves if they need to. What I've done based on my experience and best practice is set target limits right now for allocations to reserves, knowing that we can't actually afford it. So what I have done, for an example, is I've looked at all the amortization, and a best practice without having an asset management plan, which we'll talk about, but when we have a fully realized asset management plan, decisions that are made there and calculations and condition assessments will all be taken into consideration for future capital. Replacement, maintenance, with a road. And again, I'm using an example of something we don't do, but it's a good example to say, sometimes if you replace the top of the road, it'll increase the life of that road rather than having to redo the road from the ground up, if that makes sense. So the asset management plan is really there to help inform those decisions and make good decisions. We do different components of asset management, very siloed within different departments. We have a facilities master plan that kind of tells us some of the things we need to consider with HVAC systems and roofs and different things like that. So when I came on, we actually worked with staff and we developed a 10-year capital plan. And from that, we present to the board a 5-year funded capital plan. So what that means is you have capital within that plan and it's either funded by reserve or grants. All of it's funded. The minute we change or reallocate that, because I have 126 services, essentially 126 reserve buckets that all have to be kept separate. The minute we change that, it has a domino effect. So if I spend an extra $60,000 when I only budgeted $50,000, that would greatly impact my ability to fund the future capital in that 5-year plan because it's accessing all those funds. So I have a system we work with to manage a 5-year plan and see the reserve balances dipping down and up. The important part of that is if I know in year 5 that I need $250,000 for a tender in the fire department, I don't want to wait till then to try and come up with 250. We're going to be putting away, $50,000 a year in contributions to build that up. So it'll be better informed. But my point being, right now, I can see that we should probably be making about a $5 million contribution, $4 to $5 million contribution to reserves every year to account for the amortization, to account for the depletion of our current capital so that we can maintain it or replace it when we need to. That doesn't even include any new capital. So the only area that we've done a little bit of that to account for new capital is the library services. And then we have to do that a bit in utility services because of course these are systems, some of these systems like Pritchard Water and Sewer, they didn't have those. So we've incorporated those dollars in there, but a lot of our utility infrastructure is funded through grant funds. A lot of our community works funds go to support water and utility system infrastructure. The problem there is, and now what we've seen is we've had to bring you back a utility system plan that has greatly increased the user fees because there wasn't an intentional amount of money going into the reserve to account for when that system no longer worked and we didn't have grant funding anymore. So we've tried to write that on the right course. Right now, the plan I'm putting in front of you for reserves is really based on a best practice and not on actual need. But the reason I can stand behind it is because as a finance person, I'm taught and I'm aware that every time we have amortization, the cost of our asset goes down, we're going to have to invest that money back into that asset. So if you have $1 million asset and over 5 years, it's amortizing $2 million a year, or sorry, $200,000 a year. When you're 3 years in and it's amortized $600,000, what I know is to replace that $1 million asset in 5 years is going to cost me more money. So this plan I have in place of just replacing one times amortization, not really sustainable for your capital, but I can tell you nobody I've encountered yet is 100% at this in local government. We're doing our best because for one, politically, how do we tax so much now for future capital? But we're seeing now infrastructure fail. We go to Asuias, you can see great big outbursts because no money put away. All of a sudden, there's great big amounts of money being needed all at once. That's why they're pushing us to make sure we have these asset management plans in place. So I'm not going into great detail with any of this right now because it's based on a best practice. So what I am saying, what I'm proposing is for reserves, we look at probably in an operating reserve, having 2 months worth of operating costs would be reasonable. And then that's a limit. So you have 2 months of operating costs unless there's some other special project, and the board has supported. In capital, what I'm suggesting is that we use the one-time amortization as a starting point in a best practice. And I can't even accomplish those two things in 2025 because there's no way the board is going to support increasing taxes by $4 million to get us to our targets. So what I'm suggesting is if you support and the board supports what I'm putting forward for now, we're going to build a 5-year plan that tries to build us up to there. And in the meantime, I've presented over the last year and a half with board support, the inclusion of, you could see, we're bringing an asset management strategy, we're bringing an asset management updated policy, and we're looking at bringing on a full-time asset manager because this is something that we needed to be doing for the last 15 years. And everybody doing it off the side of their desk is not getting us to where we need to be. We need somebody looking at the total assessment, moving us forward on our checklist. We're looking at possible grant opportunities, but right now it's a funded position that's going to be coming forward to the board that we talked about at strategic planning. And we've been working the pendulum, trying to give this person when they start the asset management strategy so that they have a plan to work with. Those are really the components of the reserve part of this policy. So that I will go through, because I went through twice with you guys kind of in detail the components. I didn't want to go through that today. I didn't know if that would be the best use of our time, but give you guys the understanding of where I'm at with those benchmarks. I think for capital, there wouldn't be a limitation of how much in the capital reserve at this point. What I'd say, there's a limitation on the maximum contribution you would want to see in 1 year. So if we say a best practice is, and in the library, we have $1.2 million worth of amortization. If we say a best practice is every year, as we have $1.2 million worth of amortization, we should be contributing to the reserve $1.2 million. That makes sense. Like I said, time value of money, it might not get us to our full target, but at least we've got that. And then if we have to obtain grant money or delay and make decisions like that, we do. So that's our minimum amount is what I want to try and achieve. Our maximum amount might be 3 times amortization because we have an infrastructure deficit that we don't talk about. That is, we've had assets for how many years and it's been amortizing all this time and we haven't put a proper amount of money away to replace that. So I'm not even bringing the deficit into the equation because that's a whole lot of work that I need help with the asset manager to help me bring you. Utilities has done a really good job on that to try and bring you informed information to increase rates there. I haven't been able to accomplish that in the other areas. We don't have the resources right now. So I could go on. I'm going to pause there for a minute, see if there's any questions on the reserve. And then the surplus one is a little bit easier, but I think a little bit more contentious. So we'll get the reserve topic out of the way first, I think.
Welcome, Director Laird. Director Grenier.
Thank you, Chair. Thank you for that explanation. Totally agree with the separation of the surplus and the reserve policies. If I could step back for a minute, the way, and because I think that how I see things is what I'm going to tie into my recommendations or suggestions. When we talk about surplus, it's kind of equivalent to an overdraft account at your bank. Gee, every month you go in and out and there might be a shortfall, and that surplus policy of your 10% gives each department within its 12-month scope an opportunity to fluctuate on a known understanding. All the directors know that there's a 10% amount, and we know that has to go back into revenue the following year. It's defined, and anything outside of that surplus policy of 10% draws attention as it should. So I'm quite content with that 10% number. When we get to reserves, I think of reserves as mortgages, not lines of credit. I think of them as home equity lines. So in a case of a mortgage, you're saying, I'm trying to buy that house and I'm going to spend the next 20 or 30 years paying for that house. That's an understanding. So when we talk about utilities, we talk about buildings, or we talk about any of these long-term assets, it's quite an appropriate strategy. And you've tied it to amortization to some extent, but it's also planned capital. So where you have planned spending reserves, particularly things like cemeteries, where you know that they're going to just carry on, that's an appropriate planned long-term method. No problem with that approach. Where I have a real challenge is something called the opportunity reserve and the risk mitigation reserve. Because these two things are not for a specific thing, they're for an unknown. I understand, and we did have this discussion at the last meeting about the value of having these things. And I would say, rather than tie them to anything in particular, that we set a dollar figure for the TNRD itself. We combine those two things, risk mitigation reserves and opportunity reserves. And I'll pull the number out of the air. If $2 million was the right number for a 12-month window, where we said, gee, something came along and we have to access capital. If the $2 million was the right number, we could access it. And in the next 12-month period, we have to replace it. So it's sort of like a home equity line that you use to update the patio. Not buy the building, but just update the patio. And it would be corrected in the next year because it's a fixed dollar figure, whatever the fixed dollar figure is. So you've got sort of three useful things that stop the automatic buildup of zombie reserves. That's my concern, is that building up reserves with no specific purpose becomes a burden on the taxpayer. So yes, we need that flexibility under, in my opinion, under opportunity reserves and risk mitigation reserves. We have the 10% fluctuation. Gee, it's a big snow year and we're dipping into, we didn't plan on that. That's the surplus. We'll go through the surplus first. And gee, it was really bad. And now we have to access out of the risk mitigation reserve. Well, we have a $2 million that we can take down there, but we got to put it back the next year because that's just that short-term thing. That's completely separate from water utilities, from building libraries, from all the rest of that sort of stuff. And so I would suggest that is a better approach for those unknown things that you're spending on, that you would normally go back to your taxpayers and say, do you want to spend money on, say, cell towers? Do you really want to get into the cell tower business? That's a question that we should be, that's an opportunity, but maybe it's an opportunity that needs a wholesome discussion. So that would be my suggestion on this approach. I still don't quite follow the amortization. I understand where you're going with amortization, but I'm not sure, for instance, in the asset management plan, some people say, oh, by the end of the life of the asset, you want to have enough money to replace the asset again. Well, that's just unrealistic. Every strata corporation goes through that. They're not going to rebuild the building at the end of the life of the building. And people don't want to fund that while they're living in that building. So you might say, well, we target 30% of the capital asset of it using your amortization approach. That will get us to a 30% buildup so that when the roof needs to be replaced, we got 30% of the roof there. And then the people that benefit from the next 30 years, they pay the other 70% while they're living there. That kind of approach. And it's not clear to me under your amortization whether you're trying to do the full meal deal of 100% or whether you're trying to do a smaller percentage. So I think that those policies, those concepts have to inform whether it's a 1-month amortization or a 2-month amortization.
Thank you, Chair, through to the board. So through to the committee. The approach of 1 times amortization is not to address 100%, because I know we have a deficit an unidentified infrastructure deficit from not doing this without really knowing what the board would want as a future target. And knowing that I have to keep all of these separate. So I have 126 separate plans, essentially. It could be a little bit different for a large number of those, our plan. So an approach to come here today for our first go at this is a blanket approach. And then my hope is that we would be able to go through, so the risk mitigation wasn't really addressed in this, other than giving a mechanism to say we could have risk mitigation. We could have opportunity reserves if that's what the board desired. So we didn't eliminate that from possibility, but I set no limits. We could have a risk mitigation reserve. It would have to be a reserve per service where we believed a risk mitigation reserve. So let's say, how many fire departments do we have?
9.
And how many do we own?
9 we own.
9 we own.
13
Okay, yes,
there
13.
is.
Okay, so the 9 fire departments that we own could probably have a risk mitigation reserve. Let's say a fire department's operating was 800,000 and we picked a percent of 3% for risk mitigation. That's $24,000. We could say we're going to allow for a 3% of operating risk mitigation reserve max. Okay, and then you would know where it's required, because there's some areas we have very little risk. We wouldn't have a breakdown, and it's very unlikely we would need that, right? So I'm not opposed to a limit for risk mitigation. I think it makes sense. I just need you to remember there's 126 different services that we have to rank on their own merits for whatever happens in that service. The other thing is that the 1 times amortization is a blanket approach. It will not address all the capital deficit. It will not fully replace capital, but it is a plan based on, if we had no deficit in mind, it would definitely be an 80 to 90% replacement. If we were starting with, we knew that we had the deficit covered. Right now, without having all that detail for you guys, I just had to come up with a blanket approach, knowing that we're not even going to be able to achieve 1 time amortization. That was the minute I had analyzed 1 time, 2 time, and 3 times amortization. And I know we can't afford 1 time amortization at this stage. So I wanted to set up a plan over the 5-year term where I try to build up to that until the asset manager is in a place that they can better inform this plan.
Supplemental.
Thank you. I'm not trying to create more work. I wasn't suggesting that it be divided among 140 and reserve. What I'm thinking, let's call it MFA 2. The TNRD's MFA. We say, gee, as the TNRD, we need to have $2 million sitting aside for something that we don't know is going to come about. And whatever department borrows from it has to repay it back in its budget the next year, but it's always there. And we know as a board and as staff that there's a hunk of dough that addresses opportunity and risk mitigation. So you don't have to define it down to 150 and use 3% and all the rest of it. It's a defined capital amount that gives the TNRD the flexibility to respond to emergencies and opportunities, but it's not a burden on the taxpayer because it's limited by a dollar figure. And that way we know that the first line of defense, like in the planning department, is to use its surplus. Gee, we had a really bad year. Now we have to dig into reserves. They have a dedicated reserve, but if they didn't have a dedicated reserve, they could say we got an emergency or we got whatever, we have to access that. And by the next year, you're going to have to account for that through the budget and the increased budget if the condition continues. It's a simplicity, but it caps the burden on the taxpayer.
Short answer is we likely could do that. It would be in the administrative function. Legislatively, if another service utilized those funds based on board direction, they would be required to pay it back over a period of time with interest. So if the committee wants to recommend, or when we talk about it with the policy and governance and it comes to the board and that is something you guys would like incorporated in there, and the board supports that, that's definitely something that could be achieved.
Any other questions or discussion? Director Laird.
Apologize for being late, but sometimes things happen. Anyway, I had a question when we're talking about, for instance, the fire departments and any of the utilities that the TNRD operates. When you have shortfalls or increases, doesn't the tax burden go right to the specified area that has the individual service being provided? So it's not an overall TNRD tax increase, it's strictly related to the service areas where you either have shortfalls or you require funding for more capital investment.
That's correct.
Any other questions? Oh, you have another one? Okay, go ahead.
Yeah, and Chair, I have many questions or comments.
Well, let's remember, we need to keep this at a high level and get out of here before the day ends.
So I'm just wondering, Chair, if there's a way that perhaps I can have a meeting with, to go over some of these other points. Have a direct meeting, I suppose, because I think this is all heading in the right direction and it's all with the intent to making it better, not otherwise. And I do have another question. Okay. The E911 has a capital reserve. And if I understood it right, that's a contract. And I'm not sure that contracts should have reserves. They're for fixed periods of time. We do have a contract for garbage, we have things that are defined contract periods. And I appreciate that over time, when you go to renew the contract, it goes up. But I'm not sure that a reserve policy of building up a reserve for an unknown contract is the best course of action. I think that on defined assets, yes, but on contracts, I don't think we should be building up reserves. What do you think about that?
Yeah, thanks for that question through the chair. We do have capital assets in that service. So there's actually quite a few things lumped into the E911 service. The first one, which you're probably referring to, is the contract we have through Ecom 911, which is the primary answering service. The second contract we have is through Kamloops Fire for the fire dispatch service. But then the other piece is the radio communication equipment that we own and maintain throughout the regional district. So enabling fire dispatch. So everything involved in the Kamloops Fire Center dispatch, communicating with 26 fire departments in the regional district. All of that radio equipment, including equipment on towers, on mountaintop repeaters, is all owned by the regional district. And that was the subject of a review that we did a year ago that we brought to this board that identified a $6 million deficit capital need for upgrades. So we actually are in a shortfall there. The amount of need for upgrades, we don't have a big enough reserve for. So we're showing, you'll see in the budget that'll be coming forward in the draft budget, we are showing a drawdown of that reserve to start addressing the key priorities of that report that we did last year. But to answer your question, we do have capital assets. That's why we have the reserve there.
We do have two recommendations. Are you moving both or one? Let's move both. Seconder? Thank you, Director Kerslake. Any discussion? Director Grenier.
I have a question why this is going to the policy committee as opposed to the overall board.
So I'll attempt my answer and then I'm going to look to Mr. Lois and Scott. So it's our practice that any policy that is developed goes through the committee for review prior to it going to the board.
Thank you through the chair. Ms. Fox is, she's put it very simply and eloquently there. Essentially, these are proposed policies. We have a policy and governance committee. It's considered best practice, although of course, as finance policies, they have been brought to this committee for your input and consideration, but they would also go to the policy and governance committee, which reviews all policies before they're considered by the whole board.
Any other questions? Call the question. Let me call the question. Call the question. All those in favor? Any opposed? Director Grenier is opposed. CFO Fox.
Just want to make sure, so that was moving the motion for the reserve and the surplus.
Yeah, I've never understood why we separate them out, so I suggested we just move the two together.
That's fine. I just want to clarify in that, and I think it's fully understood, as Director Grenier also kind of summarized as well. There is the 10% of operating for the surplus policy. We're going to bring a report that shows every service with every surplus, which I actually included in the report even last year. And then you'll see the surplus or deficit in each of those services, which will directly go into 2025's revenue. And you will get the ability, there'll be comments provided to you for anything that is outside that 10%. And you will get the ability to ask us what we're doing with it, why it's there, why it's so far out. And there's a few reserves that surpluses like that do fluctuate. But anyway, just important thing to note is that you will see the surpluses in each, and you will have the ability to provide feedback on those surpluses to the staff based on our comments.
Thank you. Moving on, new business. Anyone have any new business? Director Laird, then Director Grenier.
Thank you, Madam Chair. Director Grenier has a lot of questions concerning the budget. And a lot of it, I know that Director Grenier is very, I guess, serious about how he looks at the budget. And he did make a suggestion of whether or not he could just have a one-on-one, because a lot of the questions I would imagine that he has, the board would not be interested in, going through it as in depth as Director Grenier. I wonder if it'd be possible just to have a one-on-one meeting with our finance officer, just to sort out a lot of the issues, because I think we're all in favor of the direction the budget's going in. But if we have a question like that, is that a possibility?
CAO Hildebrand, it's my understanding we don't do that kind of thing. Can you explain the process?
Yeah, I can thank you through Chair Bass to Director Laird and Director Grenier. I hear what you're saying. I just feel like those questions need to flow through this committee though, from a process standpoint. Like even if you were to prepare, hear the questions so that everybody in this room knows what you're asking. And then that way it could eventually then shift to the board if as those are accomplished or not accomplished. Just some kind of record, because I'm sure you've got lots of great ideas and we want to hear them. It's just, I want the rest of the board to be part of the conversation in some way, other than it's just one of 27 then saying, I think we should do it this way. And I want to make sure it's transparent and collaborative, I guess would be the way to do it. So that's my suggestion. I don't know if there's another way, Carla, or because we meet with directors all the time. It's just, I want to make sure that the rest of this committee and the board understand what you're asking so we can be prepared for the budget meeting and future board meetings.
Before you go, CFO Fox, I just want to add that I have that experience on city council. We have a councillor who continually meets with CAO Corkle with the long list of things and gets all the answers, but never shares them. And so I think this is a good way of making sure that we're all on the same page and we don't have to redo this again when everybody else finds out us third time. Go ahead, CFO Fox.
Yeah, so I believe legislatively, anything that we discuss with a director needs to be documented that way. So if it's suggestions for a change in work, a change in direction, increased work, it's very important. So lots of directors go and talk to staff to get information, which is fine. We just have to be really careful about that. So having a list of suggestions that are put into an email that go through the committee, I think is probably at this point, reasonable. The rest of the committee sees that. If there are things that I can take into consideration as far as suggestions of reporting and formatting and things like that. If I all of a sudden had to take a week or something to change something to address an issue or an item that you brought forward, I'd be kind of teetering on taking direction from one director that maybe the rest of the board doesn't want. So, and I've been pretty accommodating to try and incorporate changes and things where it makes sense, and that I can shift and do pretty easily. And I don't want to seem like I'm not willing to do that. I just have to be careful, because if I open that door, then all of a sudden I have 27 different people feeding me direction and me trying to decide what ones I should act on and not. But I certainly appreciate the feedback, and I hope you can see that I've tried to incorporate and accommodate a lot of the suggestions into the work that I'm doing.
Mr. Lewis, in a situation like that, could we run the risk of quorum on an email?
Anytime you have a majority of a particular body in any one place, be that physically or virtually, you should be considering whether or not there is a quorum present and if you are advancing the business of that particular body. It's always, that said, just because you have a majority, say, on an email string does not necessarily mean that you are in a meeting, because you are still. The example I always love using is there's no reason this entire committee can't get together and go for lunch and discuss the hockey. That's never a problem. It's when you're advancing the business of the body that things potentially become problems, and you want to make sure you're in a properly constituted meeting. If you have a majority of the body getting together and making decisions and advancing the business, then you should be concerned. If you are simply asking questions or internally yourself individually formulating the questions that you want to bring to the committee, or the future resolutions or discussions that you want to make at committee or board, then that wouldn't be a problem. So you generally need to make sure that you're on the right side of the line of not acting as a committee, as a majority, when you're outside of a constituted meeting.
CEO Hildebrand.
Director Grenier, is there a way, can you think of a way, or maybe you can share how we can communicate this through the committee, that it's just formalizing it so that we make sure that we don't have another board member that's not even aware of this meeting saying, well, why are we doing that? I didn't have any say in that. So any thoughts on kind of how to communicate it?
Well, through the chair, thank you for that. I have a whole bunch of questions. Some of them are questions, some of them are suggestions, some of them are that require the interaction and feedback. Oh, this is why you did this, or is there a better way to do it? And it's all with the view to making things better. I have zero problem if I was to schedule a meeting for 2 hours with CFO Fox, invite anybody that wants to come and participate, observe, or whatever. Very transparent. I'm not thinking that it is motions or directions to CFO Fox. It's a greater insight and feedback. Presumably you want feedback from this board. We've been at it now for an hour and we're at the end, and I have a whole bunch of questions. Doesn't sound like the board wants to go through all these details of questions. So I'm just trying to find a way to get that through. And I'm mindful that the first 2 years, you've been busy. You've been preoccupied, and the last thing I wanted to do was to interrupt your time. But it does seem, after 2 years into this mandate, and after all the success in the work that you've done, the recognition that we've achieved at the UBCM, we want to continue on with that to make things better. And I think that I can contribute that way.
CEO Hildebrand, I have another question. Since you're the only employee of the board, and it's your job to tell your directors how to do their job, should those specific questions about making things, the job work differently, go through you?
Through you, Chair Bass, to the committee. I think including the CFO makes perfect sense, given that we're talking about budget and she's the one that's accountable and to the budget, because we work closely together for that. So I don't think that would be inappropriate at all. I just want to figure out how we can capture that, because like you said, anybody can join that meeting and participate, but how are we going to reach the other 21 directors formally, because they're not here? So that's my only question, is I just want to make sure everyone's aware. That's all. We think it's extremely important to meet and answer the questions. I just want to make sure it's.
I have a list. I have
Fair.
CFO Fox next, then I have Director Laird.
So the option from my experience would be if the rest of the committee wants to entertain the questions, because the questions are here to go through the committee, that you guys should extend the committee or vote to have another finance committee meeting where those questions can be addressed through this conduit. Because having anything outside of that is stepping outside. So, and I can fully appreciate, and I certainly enjoy having somebody else interested in the financial presentation, because lots of people, it's not their thing. But you also have to appreciate that if 6 or 8 members of a board don't want to do that and one does, it's the decision of the board as the whole, whether they want to entertain more. So I think you guys have to decide if you guys want to go through that process and have those questions addressed. If it's clarification questions in regards to the budget variance and you want more understanding, those are questions you could ask me at any time. When this goes to the board and a board member might have a question about the variance, I don't understand this. I think those clarification questions, it's wanting to see change or anything different. That's where we start to delve into more direction that's supposed to come from a body rather than one individual. Does that make sense?
And the only thing I would add is we want to work with you and answer those questions and make the changes. We just want to be transparent. We just don't want to get caught to say what the rest of the board saying, why did you make that change? We want the entire board to know why we're making it and what's important. That's all.
Director Laird.
Thank you, Madam Chair. I think it might be a good idea if Director Garnier actually got point by point, like when you put it down and present it to yourself and Carla to see what the questions are and whether it should come back to another committee meeting of or that might just be answers, that questions that can be answered that don't have to go back to the committee, but there might be points in there that the committee needs to look at. So if Director Grenier could put his concerns down and list them, and it's interesting when you sit and do that, you actually sort out a lot of probably clarification issues.
Yeah, and I think we'll still meet. We can still meet Director Grenier and walk through those things. But if we just say that here's the list and then the rest of the committee are aware of them, that's my only request. Is I just want to make sure people know what we're working on and what we're potentially changing. That's all.
Director Laird, then I'm going to ask Director Grenier how he feels.
Thank you. Would that mean that Director Grenier would submit his information to yourself and you would meet with him and go through it and decide, or not decide, but look and see what actually needs to come back to the committee?
I think what my suggestion would be, that's a great way to start. And then I would make sure that a copy goes to this entire committee. And then we sit down and meet with Director Grenier, go through his questions, answer those, and see what, I guess, the outstanding items are that maybe he needs more clarification or direction from. And then we bring it to the budget meeting, we bring it to the board meeting, whatever we need to do to get kind of board just direction. So I'm fine with that. We want to work with anybody that has questions.
So Director Grenier, will that work for you?
It certainly will. And I note that we've got 45 minutes left before 12 o'clock. Is there anything, Chair, that is stopping us from asking some of these sort of bigger questions? Like I've been very selective in what I've asked because I'm mindful that, you know, I don't want to be the one always hitting the microphone, and we've got other people here, but.
Okay. Just because I'm a governance wonk here, I'm going to get some clarification from the other governance wonk. Would would these questions be considered new business? Can we do it through that? Or should they have their own agenda item, or looking for a governance suggestion here?
Well, I'm essentially if these are questions about the policy that this committee has voted to send to the Policy and Governance Committee, then ideally they would have been dealt with earlier in the meeting. But that said, the committees tend to operate much less formally. And if the committee as a whole would like to entertain a larger discussion at this time, the only caveat I'd put on it is if this results in people being unhappy with the policy as more information is discovered, then you might want to revisit the vote that you made earlier, but that could itself also be done. Essentially, if the committee would like to do this, I don't see a problem with doing this.
Anybody have a problem with this? Nope. Director Thorpe? Nope. Okay. All right, I'm good with this. Director Grenier?
Okay, thank you. So I wonder if you could explain, CFO Fox, the transfers in the administration. I noticed that there's very large transfers in the administration in both the quarterly statements, and then I didn't so much pay attention to the reserve, but I'm wondering how that works. Some departments seem to be contributing at a 3% rate, and others are either not participating or participating at some other rate. So could you explain to me how you've dealt with administration in each of the departments?
Thank you, through to the committee and through to Director Grenier. So right now, I don't really have a guiding document from the board that says how much anybody should transfer to the reserve. What's informed that more is the funded 5-year plan. And if there's things within that plan that need money, each of the budget managers are looking to those items and trying to make sure there's enough money in the reserve. Sometimes without having those parameters in place, the transfers to reserves get sacrificed because we want to keep tax rates low. So when I go to the board and they don't want to see large tax rate increases, they're like, okay, where can you reduce? And if you don't want to see a change in the level of service you're getting, the only place you can reduce is transfers to reserves. Where what it makes me think of is the library. The library's books are considered capital, the actual physical books. When we change the system of operating and capital separate, we have to do a deliberate transfer. We're spending $800,000 to $900,000 a year on books. So if we don't transfer that in, I look at the reserves and I say, okay, over those 5 years, can we afford this? Oh, the board has earmarked some of those reserve funds to different libraries. Oh, my reserve balance is actually lower than it is. And we have to make sure over those 5 years, we're transferring enough in or the libraries aren't going to be able to have books. So the balances in the reserves aren't necessarily being driven by any policy right now. They're being driven by need and tolerance, the board's tolerance for tax rate increases, which isn't the best way to save for capital, as you guys would probably know. The other thing, the amount of the administration reserve transfer, $1.1 million of that is the Community Works Fund, formerly gas tax money, comes in as revenue and it gets transferred right away to the reserve. So 1.1 million of that was for Community Works. The remaining part of that is to address IT infrastructure because and then sometimes there's capital, there's building renovations that happen without opening up the capital list. I'm trying to think of some of the capital items that are coming up on there that are funded out of that reserve. So those are some of the things in that, and I can specifically tell you what our reserve transfer is dollar for dollar for 2025 if that, or 2024 if that's what you'd like.
Supplemental to that. So I guess I'm really not focused right now on the reserve as much as on the surplus or the administration charge. So some departments in your quarterly statement, they finish off with a line item that says administration charge. And I presume that that's the department's collective contribution to administration overhead cost. And when I started to look at that, I thought that I had come up that you were using a formula of 3% of the expenditures, and then I ran into some difficulty because it wasn't universal, it wasn't universally applied, and so I'm asking really, how are you dealing with that on the budget? And then reserve is a later thing, but
Okay. Thank you. So the administration fee is based on a policy. There was some discretion in there from the previous CFO. I try to follow the policy fairly tightly. So anything that we do, the accounting for that service is typically a 5%. So if you think of the fire departments that we run, typically that should be a 5% admin fee, and the ones that we don't run is a 3%. We have done an analysis of the admin fees this year, and what you'll see for 2025 is they're much more consistently applied, but they all were within that 3 to 5%. I know in the fire departments, they kind of, some are going into the 2.3, and so we've just made them all work appropriately. Last year, I didn't spend much time analyzing the numbers for where we were at. The other places where accommodations made is for utility services. So in utility services for water and sewer, we're not charging, basically a historical decision was made to cap the amount of an admin fee that they could pay. What I can tell you is the organization's admin fee without the director's costs is just over $8 million. And the admin fee that we collect back from the services is $1.4 million. So it is there to offset operating costs that we spend on the services, but probably if I were to set it up again, that would be more fairly distributed, so we were collecting appropriately from the services. But you can only imagine if I were to say, okay, really the service should be paying 10%. Now, to try and do that across the board to all the services would create a storm. So what we're saying is we're only collecting $1.4 million at admin. There's a policy that guides the fees that we charge, and we're trying to consistently charge those fees across the board. And you'll see in the Film Society, they weren't getting charged an admin fee before, they are this year. Because in our analysis and interpretation of that policy, they should be. So that's being applied there. So you'll see a little bit of change there.
So I guess what I'm trying to understand is the underlying formula that you're following. You've said your admin budget's multi-millions and you're only collecting $1.5 million from the other departments. Is that is there some structure or some document that we could follow, or some policy that you're following that you could advise us? We think $1.5 million is the right number as opposed to 3 or 4 or whatever it is. And then the application, it seems like there's some discretion used as to whether or not an admin charge gets charged. And there seems to be some discretion as to what the percentage would be of the expense if it is charged. And it seems to me that that's an area that we could tighten up, at least so directors understand what percentage of admin is being covered by the department itself and what the percentage was.
Yeah, thank you. So as I stated, we did a thorough analysis of the admin fee this year. It is an admin fees and charges policy or bylaw. Maybe Greg, okay. We'll tell you what that is. It is specifically stated what gets charged to different areas. We've cleaned that up, made sure it was consistent. There is discretion applied to utility services. And it specifically on this policy gives the discretion of the CFO to make those determinations. That's not my favorite thing to have in a policy. So I've eliminated that in everywhere possible and made it consistent to the policy. The only place that is an anomaly is utility services, where I've left them all capped because doing another increase to utility services after the increases that we saw didn't really seem like something I wanted to take on this year.
Next question, I'll move on. You had a municipal service listing with a lot of yeses and nos, and then you had, I guess, an equivalent one for electoral areas. And I wasn't, number one, I wasn't clear on the electoral area second page. You had 2 columns for each area. And it wasn't clear to me what the 2 columns were telling us. We followed on with the yes, no, which means we either participate in that particular expense or not. but I wasn't clear what the second column, or I guess in this case, the gray column was telling us.
The two columns, the gray column is only really relevant because it's just duplicating what the title is, Area A. So you could follow down easily, and because the text is so small, sometimes it's hard to follow. So what I've done is just put Area A all the way down where so if you looked down, and I'm going to just refer, it's page 21 of 76. And this was a little extra piece that we put together for people to give them an idea of what services they pay into or not, just another way to look at this information. So it's, Justin has it on the screen there. So if you were to look down or column A for electoral area A, the only place you kind of see a discrepancy is when you start to see like Clearwater and District Highway Rescue Service. And it says area A and B are the ones to pay into that. So it's just specifying if there was a very limited number of services. It's just trying to give you a little bit more direction on that area. Okay, I see. I will check into that just to make sure that that is not might be a typo in there.
And so that happens on a couple of things, but the next point to that would be instead of the word yes, which is 3 characters, it might be useful if we had the percentage that they participate relative to their overall assessment. And we've talked about this in the past because using City of Kamloops, for example, where it participates in things like library, it participates fully to its assessed value equally with every other assessed value area. So that's one where yes would be applicable, but in a situation where, say, the City of Kamloops doesn't participate to its full assessed value, we had this robust discussion about planning services, and there was some dollar figure that it was paying as opposed to a percentage of assessed value. That percentage would automatically show up as something different than their full participation in library. And it would be a percentage. If you take it to the first decimal, it would be the same amount of space as the word yes. That way we could instantly look at this and say, gee, the City of Kamloops does participate in planning and services, but only to a certain percentage. And what is the background there? So this is informative, but it's not fully informative, which leads me to the question, what is the percentage that they pay? And so I'm thinking that information is readily available using last year's budget. And we could take this same document and then reformat it to the percentages, and we would get much more information out of those 2 pages. Again, it's about the value of getting that information. I think it's particularly valuable when we're talking about a surplus and a reserve for a line item that has had a lot of attention. And the question is, who's paying into that? That's why I'm suggesting that.
Absolutely. So there's a number of things that pop into mind. Number one, I could easily put this together somewhat for you guys as a nicety with some of the time that I have. Putting the percentages in there can be done, but it's all manual and it takes my time. So I think of you guys going to UBCM, getting an award, that took 4 people 2 months worth of time to put together that tax impact document so that we had that information for the board to present to the public. It's a huge investment of time. It was a great payoff. It informed the whole budget. This information is available within that tax impact document, not in the same format. I certainly will take into consideration that it might be more useful for you, but it probably won't hit the top priority for me right now unless the board wanted me to invest my time there. So I have to kind of pick and choose. But absolutely, I'm glad somebody found it useful to that point because I thought I would try and give you guys a little bit different look at it. If you guys want to see that, the different percentage breakdown now, go to the tax impact document, and I've created columns within that you could see that. The amount of assessment for regional services is how each area's piece of the pie gets separated up, and that hasn't changed. So it would be the same now as it was last year until BC Assessment gives me new assessment information. So absolutely, I'll take that into consideration, and if it's something that we can put together easily, we'll try to do that for the next version.
I'm wondering if it's useful to the board if we had aged payables and receivables report with either the quarterly or the year-end statement. That's a practice that is followed in strata management so that you're aware of people that are paying or not. And the reason I raise that is I see some municipalities are much more advanced in their payments to the TNRD than others. And I don't know the reason for that. But it seems to me that if it's a payable thing, it would show up on an age payable 30, 60, 90 days. So maybe what you're reporting to the board is anybody that's delinquent on a payment of 120 days, what the dollar value is. Or if we are delinquent in paying somebody, usually if there's a delay, it's because there's a reason. But at least that forces a discussion.
One thing I would recommend is if you look at the audited statements and you look back 3 years and compare it to the last year's audited statements, you will see the payables and receivables amount on the audited statements reduced. And that is because of an intentional direct effort from my team to address those areas. We do right now put information on our website in regards to payables, but we're not giving you that age payable summary. Yeah, it's who's getting paid, and also a check register, a payment register gets signed off by the chair of the board and myself every month for accountability. So as far as that goes, we're very accountable to those aging amounts. What I can tell you is that I actually brought up the reduction from the audited statements to this audit because I'm really proud of the work that the team has done there. We've really made a concerted effort to reduce those numbers. I would have to defer possibly to Greg, as I'm wondering if I'm thinking that's public information. But I'm not 100%. Again, it's directing an increased work. And if that's something that the board would like to see, that should be a recommendation that's made, and then the board support that to come out because it increases my finance team workload is all. But other than that, as long as it's public information, I don't see. I have to look to my legislative counterpart.
As Greg's thinking, because I can smell the smoke. Do you know anything from the city of Kamloops or Barrier on that? Like, I know we publicize, and on our website, we share who we paid and who's paying us even, but not the amount, and then if they're in their arrears or anything like that. So I don't know publicly if we can get into that detail.
The other way typically I've seen boards kind of monitor and manage that is they would have a policy in place, like a collections policy, and that informs how often, when things have to go to collections. With utilities, it's only with permit fees or other types of fees, because anything attached to the property, if it's unpaid at the end of the year, gets transferred to taxes. Yeah. Yeah, as far as collections and timing and timelines. So there is that, but it wouldn't inform you right now what's outstanding.
So just supplemental to that, we've got, I don't know, a dozen municipalities. In your reports, your quarterly report, it shows some municipalities that have advanced funds to the TNRD, and then others haven't. Some of these municipalities are borrowing with MFA financing. And so I'm thinking to myself as I'm reading this report, gee, if we have to borrow because that municipality hadn't paid on time, I don't know whether they have paid on time, but if they haven't paid on time, we're now borrowing. And the irony there is that we're also a signatory on the MFA. They're using their MFA financing. It seems that it's inappropriate that a municipality be late. But of course, I don't have an age payable to know whether they're late. I just see a difference as between, say, the city of Kamloops and the city of Merritt. And so I'm just trying to figure out a way that maybe it's through policy. Maybe you advise us if any members are late by 120 days. And I wasn't thinking about an age payable of, all the users on the utility. No, I'm thinking about our own internal stuff because we're borrowing, they're borrowing, we're signing on MFA. Seems to me that there should be some consistency.
I hear you. If I could just make one comment, I know that's all regional districts, all 27 regional districts, that's legislated that borrowing from the municipalities flows through the regional district. So that's never going to change unless there's advocacy to change the legislation. But what you're wanting to know is, are the municipalities paying on time? I guess that's the question, right? Am I hearing you right?
And are the municipalities paying the TNRD on time for the things that they have to pay?
So I would say that is probably our absolute lowest risk accounts receivable. And what I would say there is I have never experienced a year where a municipality has missed a payment on borrowing. I can't give you on the spot a report who pays within 30 days or who pays within 45 days. But it has never been an area of concern for me. And we don't have a year where a municipality hasn't paid. Now, we have municipalities and different areas that have like search and rescue, and they receive grant and aid funding from us to offer different services. For an example, oh no, I guess we pay Merit. I'm thinking in the vice versa, but any group, even if it's a municipality that receives funding from us, the only way that we pay out funding to them is if they give us their financial reporting. So typically, when we have a contract with a municipality, I'm trying to think, like, other than maybe the city of Kamloops, and a couple other municipalities that pay us direct receivables.
Yeah, we have service contracts with municipalities, but those aren't tied to any MFA borrowing. So the issue there is that those are identified this time of year. If we're going through our year end and projecting year end and we're outstanding, then that gets recognized because we've budgeted for that revenue. So I can say with confidence that if we are missing a payment from a municipality that we've budgeted for to receive, we will ensure we get that payment. We've never had an issue that we haven't had that payment. And I guess if that situation ever came up, that would be
Stop
brought to the
offering the
board
service.
about how we address a municipality not following a contractual obligation.
And typically we have a contract, and within that contract, there's defined parameters that they have to pay.
Yeah.
So yeah, I don't have one example of where, one example I can think of is temporarily some things were delayed by one municipality because they had a huge turnover in CFO and CAO. And when we followed up, they just said, please give us another month here. We're bringing somebody on board, and that was it. And we follow up. But other than that, we don't have a great risk there. If that's something the board wanted, it's certainly something we could give, but I'd say we have a lot bigger areas of delinquent payments. That would be my.
It wasn't an intention to create work. It was an intention to flag an anomaly. And whether it's a policy that says, yeah, we'll report to the board anything that's, I don't know, 120 or 160 days overdue, that would be a policy. And there wouldn't be very many of those circumstances come up. But when they do come up, there should be, it should be, I think, flagged at some point, whatever that number is of days delinquent. When a payment is expected but not paid, we should be aware of it, it seems to me. Strata corporations do that to make sure that people pay their strata fees. And usually they all get paid. I agree, they all get paid, but do they get paid on time? The reason I raise MFA is because are they not paying us to pay somebody else and we're on a committee? I just want to know why, if somebody hasn't paid on time, why they haven't paid on time. That's all I was looking for. But I think we should move on because
Yeah, I would certainly say if you and the board felt that that's a policy that you wanted to create, it's up to you and the board, and you could bring that forward. I'm saying right now, there's very little risk from a municipal standpoint.
another question, while we have time, there was a line item in the surplus that talked about archives in the Nicola Valley for library, and that was the first time I'd heard of about an archive. It was about a $2.5 million item. Can you tell us what it is? It would be on the library surplus. It's the very first line item. I'm looking for it myself.
The library archive is like a grant and aid that's given to them. It is, from my recollection, in the $20,000 mark, not a $2 million mark. And it's just a yearly amount that's provided to the Nicola Valley for the archives. But if you give me a sec, I can find the exact amount.
Director Grenier, was that the right amount you were looking at?
No, it was in the reserve area. I'm just about there. It's called Nicola Valley Archives, Nicola Valley, $2,550,000. And it is at the top item under library system, Library Aberdeen. It seems to name all the libraries, but there is an amount under earmarked funds for $2,550,000. And there's no page number on our pages, so I can't. It's under the Thompson-Nicola, the reserve analysis, the 2024 reserve analysis.
Yeah, what I can tell you is that should not be under archive, and I'm gonna have to address it. That's under library system, and it's transferring funds from one library reserve to another. Anyway, I'll just look it up here, but that does not belong to the archive. That belongs to the library.
We're not building an archive.
No, sorry,
Okay,
that
all right.
is, yeah.
That was that. And then when I saw that, I was thinking about, all right, how does the future libraries that we've been talking about, the Sun Peaks Library and the others, I didn't see them in this, or I couldn't quickly point to them. So is that included in this, or is that something separate?
I can speak to that. On December 13th, committee of the whole is when we were going to do the library expansion strategy discussion with the entire board. We will talk about the history. We'll talk about all our plans in the coming years and get final direction. Because right now, the direction we have from the previous board and this board is to go and explore land and a new building and things like that. But we feel we have a better plan that we want to redirect, and that's coming on December 13th to the board.
Thank you. I think I've asked a lot of questions. So at the end of the day, what I was going to suggest, I'll put together a list of other little things, circulate it to whoever you want me to circulate it to. I was hoping that we could have a meeting, because some of these things are a quick answer and some of them are more involved with an explanation. And I would be quite happy for any and all directors that want to participate or sit in or observe. It wasn't an intention to thwart the direction of this committee or the board. It was just some way to some venue to ask questions.
Anyone else? CFO Fox, your light's still on. You still talking?
Of course, with a very manual Excel system, I try to build in all my checks to make sure that mistakes don't occur. We've just spent the last 2 months, Austin and I, upgrading all of these. So I don't, even in my new reserve schedule, that error has fixed itself. So just want to assure you on the next reserve schedule if you pay attention to that one, you'll see that that has been corrected. So. Director Laird.
Yeah, Madam Chair, I just have a question. How soon is our new server coming on board? Or how far along are we getting the new server, the new accounting program? Is it underway?
So we are right now finalizing the RFP document. That has taken, so if you can imagine, we have a number of systems across the organization with library and building and solid waste. So we have, the business support team has been doing a discovery. And what they've been doing is meeting with everybody, ensuring that they understand all of the systems that we have that are in play. And we're trying to get a system that will incorporate as much as we possibly can in that system. We know that there's things like utilities that most people are doing outside of, utility billing is usually done outside of the main system. Anyway, we are close to finalizing the tender. It's about a month and a half behind schedule. And then once that tender is done, we hope to have that all kind of moving forward. A report to you brought, did we have it for November, December? It's either going to be late November, early December. Once we get through that process, or as quickly as we possibly can, because we want to start the wheels turning in about April, because what we do know is it's in finance and we're doing year end and audit through January to March. So if we can start to move forward in April, that also includes the addition of resources to help us with that. So that plan is all coming together. So it's moving forward. It's got a 12 to 18 month implementation plan at this point. Everybody we've talked to has shot for a shorter time and they're at the 18-month mark. So everybody that we've pulled, it has definitely taken longer because of trying to have dedicated resources. So the business support team has done a phenomenal job of trying to help set us up for success by the time we start.
CEO Hildebrand.
Thank you. To answer your question, Director Grenier, if you wouldn't mind sending myself and Carla that document. And then what we will try to do, as long as Carla is aligned, is before the budget meeting on November 8th, is it 9th, 7th?
6 and 7.
6th and 7th, we'll try to meet with you prior to that, because that would make the most sense, so that if there's any discussion we need to have with the board, then makes sense. Does that work for you, Carla?
Yes.
So if you'd send that to me, even copy this committee, or I can copy whichever, and then we will find some time before that so that we're better prepared and come in knowing exactly what your questions are. Awesome.
Any other new business? We're adjourned.